This podcast is for informational purposes only and is not an offer or solicitation of an offer to buy or sell securities. SNN Network, SNN Inc., and the Planet MicroCap podcast and the representatives are not licensed brokers, broker-dealers, market makers, investment bankers, investment advisors, analysts, or underwriters. We do not recommend any companies discussed. We may buy and sell securities in any company mentioned and may profit in the event those securities rise in value. We recommend you consult with a professional investment advisor, broker, or legal counsel before purchasing or selling any securities referenced in this podcast. Welcome to the Planet MicroCap podcast. I'm your host, Robert Kraft, and thank you all so much for the support and for tuning in. You can follow Planet MicroCap on Twitter at Bobby K. Kraft. That's BOBBYKKRAFT. You're listening to episode 147. If you have any questions or comments, please feel free to tweet at me, shoot me an email at rcraft@snnwire.com. And when you do get a chance, if you like what you hear, please rate and review Planet MicroCap on iTunes. It really helps provide feedback for me and spread the MicroCap message. I got a long opening for you guys today, so bear with me. I got a couple things to announce and everything like that. But I really would like to start off by saying, whew, glad that's over. Yes, I'm talking about the election. And as Forrest Gump would say, that's all I have to say about that. So we just wrapped up the SNN Network Australia virtual event. Thank you, everyone who registered, attended, and participated in our first event highlighting our friends down under. The feedback has been incredible, and I'm already stoked for the next Australia event. If you missed any of the keynotes, educational panels, or company webcasts, they will all be available on the SNN Network YouTube channel, which is www.youtube.com/SNNWire. Thank you again. Speaking of virtual events, as if you needed another one, well, at least this one is next year. In all seriousness, I'm really excited to announce the next virtual event from SNN Network. Drumroll, please. The SNN Network Canada virtual event, January 6 and 7, 2021. With lead sponsor Small Cap Discoveries, we are proud to present this upcoming event. SNN Network and Small Cap Discoveries, one of the leading Canadian small, micro, and nano cap newsletters, have teamed up to highlight our neighbors to the north, Canada. Paul Andriola and his team at Small Cap Discoveries are great at discovering the undiscovered Canadian small, micro, and nano cap public companies. Between SNN's investor audience and Small Cap Discoveries' loyal and engaged newsletter following, we have joined forces to provide a platform for investors to learn about the highest quality public, small, micro, and nano cap companies listed on Canadian exchanges, as well as hear from fund managers, newsletter writers, and financial influencers with experience and expertise investing in these Canadian assets. On this very podcast, I've had on numerous guests to discuss investing in Canada. So I've seen and heard firsthand how small, micro, and nano cap investors have been finding value accretive investments in Canada. And we decided to host an event that encapsulates the opportunities available on the TSX, TSX Venture, and CSE public markets. Register now on canada.snn.network to join us for an incredible microcap event to kick off 2021. Again, that's canada.snn.network. Sounds like fun, right? So you think announcing a new virtual event wasn't exciting enough? Let me clue you into this week's lineup of episodes from the SNN Podcast Network. Starting with In the Market Trenches with Gary Reeby and Eric Fure, our hosts welcome their good friend and colleague, Eric Nelson, CIO and founder of Abe Capital Management. Eric and his firm look at some pretty weird investing opportunities, and as Eric states in this episode, I always choose the middle seat. Yes, this is a perfect formula for an awesome In the Market Trenches episode. I really enjoyed putting this one together. So check out this episode on Apple, Spotify, YouTube, or Podbean at inthemarkettrenches.podbean.com. And for the next episode of Avoiding the Crowd with Maj Suedan, we welcome Tobias Carlisle on the show. Toby has been making the rounds with the launch of the small MicroCap ETF. And since Maj was a guest on Tobias' popular podcast, Acquirers Podcast, he turns the mic around to ask Toby a few questions. This is a really informative episode. They get into a bunch of different stories and talking about invest. I mean, it's a classic. So go and check this out on Apple, Spotify, YouTube, or Podbean at avoidingthecrowd.podbean.com. And we also have a very fun episode in store for you on the Investors Roundtable. This week's topic is streaming services and the future of media. I'm going to tell you right now, this lineup is pretty stacked. I think the combined followership on Twitter is the most we've had thus far. So do not miss this episode. Everybody on here, you definitely will recognize and should get pretty fired up for. So I figure if you, and honestly, I figure if you don't get anything actionable from an investing perspective from this episode, maybe you'll hear about a couple new shows or movies that you can go and binge. So you can watch this episode on the SNN Network YouTube channel at www.youtube.com/SNNWire. Now, for this episode of the Planet MicroCap podcast, I'm sharing with you the Planet MicroCap podcast Australia Virtual Edition panel from this week's SNN Network Australia virtual event. We have a stacked lineup here too. Tony Hansen, Matt Joass, Michael Liu, and Connor Haley. Tony and Matt are flying the Aussie flag for us. Michael is playing the role of North American investor looking abroad. And Connor wrote a pretty epic report called The Makings of a Multibagger, which showcases how Australia made up 5.1% of the total investable universe and yet 11.5% of the 104 best performing stocks over the last 5 years that were all listed on the ASX. Let that sink in while you're listening to these brilliant people. Thank you again for tuning in to episode 147 of the Planet MicroCap podcast, and please enjoy the Planet MicroCap podcast Australia Virtual Edition. Welcome, everybody, to the Planet MicroCap podcast, Australia Virtual Edition. This is our podcast panel that we're doing at the SNN Network Australia Virtual Event. And I'm your host, Robert Kraft, and thank you all for watching today. This should be a lot of fun, and we should come away with this with some pretty actionable information, or not. And this could just be, a general talk about the Melbourne Cup. I just learned about this last week, so I feel like we got to learn a little bit more about the most famous horse race out there, or at least in Australia. But anyways, I digress. I'd love to introduce our panel joining me today. Let's go. I'm going to go clockwise. We're going to start with the Australians and get to then the Americans, on this panel. So starting with Matt Joass from Maven Funds Management. Matt, thank you for joining me today.
Thanks very much, Bobby. Good to chat.
Good to have you. We got Tony Hansen from EGP Capital. Tony, what's shaking?
How you going, Bobby? It's good to be back on your show.
Absolutely, good on you. I'm trying to get all the Aussie phrases down. I'm saying what's shaking. I don't know what's gotten into me today, but we'll figure it out at some point. But also joining us right now is Michael Liu from Intelligent Fanatics Capital Management. Michael, what's going on?
Not much. Thanks for having me, Bobby.
It's great to have you on, man. And also joining us at some point will be Connor Haley from Alta Capital. And he put out a very fascinating report that he'll tell you a little bit more about. But before we get there, I've done an interview with each of the individuals on this panel before on the Planet MicroCap podcast individually. So before we get into, everything, all things ASX Australia, I thought it'd be fun to give everybody's, to give an update on everybody's background and investing philosophy. So I'm going to go we'll go clockwise again. So Matt, let's start with you, man.
Yeah, cool. So I guess a very quick overview. I got into investing when I was super young, reading paper business, etc. as a teenager, and then started buying stocks when I was 18, but didn't really have any clue what I was doing for a long time. And then in early mid-20s, got into value investing and Buffett and all that stuff, kind of took over my life. Moved kind of decided to do it full time around then, moved from Copenhagen, where I was working at the time, down to Australia, joined Motley Fool as a research analyst for a service called Motley Fool Pro there, and really wanted to join them to learn about more growth investing, I guess. I'd coming from like a value investing background and trying to apply kind of David Gardner's principles of investing in kind of big, huge winners and investing in the future and that kind of thing. And yeah, fortunate enough to learn a bit of that while I was there, and then left Motley Fool, I guess coming up to 2 years ago now, to launch. I ended up launching my own funds. I launched Maven funds just a few months ago, and that's kind of my background quickly, and just trying to find, I guess, the big dominant businesses of tomorrow while they're still small. So as early as we can get them, basically.
Finding the big dominant businesses of tomorrow today.
Yeah, pretty much. That'll be the catchphrase. I haven't distilled it down. There you go. That's it, Bobby. I'll get you to write my stuff.
Oh man, wow! I think we should copyright that right now. I mean, before let's be careful not to say that we love compounders. Okay.
Yeah.
We might get into trouble at some point.
Before anyone locks it down.
Yeah. So Tony, let's get your background for everybody as well as your investing philosophy.
So much like what Matt just said, I started investing very young. Came early to the Buffett and Munger school of sort of value investing, and in much the same way as almost everyone does, started off looking for those small, easy gains in sort of value stocks, and then as the capital that you manage grows and grows, it becomes harder to do anything meaningful in that space. So you sort of drift towards. We won't use the word that we're not allowed to use anymore, but stocks that can compound their earnings for a long time. As a matter of the C word, yeah,
the new C word.
And so that's sort of, I'd say that's the focus of what we try to do now. But with an overlay that my fund's still small enough that occasionally we'll to use cricketing terminology, which you guys won't understand, we'll hit singles from time to time. But what we're really looking for is the sixes. Those big winners. And that's how things have sort of changed over time.
I'll tell you, I got the reference. Singles. Baseball, we got singles. I don't know if we get sixes or sevens in baseball. There might be sixes or sevens.
Fours,
we got fours.
As good as you can do.
Okay, all right.
You hit fours in cricket as well, but so I take a four when I can get one as well.
That's right. Yeah, that's good. All right. So then, Michael, close us out real quick. What's your background in your investing philosophy?
Sure. So exactly the same as Tony and Matt. I started investing when I was about 13, and then a couple years later discovered microcaps and, did all the cool microcap stuff, like follow everyone on Twitter, join MicroCap Club, get to know, go to conferences where I got to know Bobby first. And then I'm just finishing up college right now at Rutgers University and also working at a small fund, IFCM. And then in terms of investing philosophy, I tend to look for, great businesses, but with a microcap, you can never be sure if you're looking at a great business, at least in the first early stages, I feel like. So I tend to look for like misunderstood situations, and misunderstood in terms of maybe having the potential to become a great business, or, a company that can grow at 20% or 30% forever. And those usually involve, more special situation types with, maybe a business transition, something changing with the business model. And then that combined with a good management team is usually a good recipe I found to find a successful microcap that can, become a great company like we've been talking about.
Finding the dominant businesses of tomorrow today. I think maybe I should rename the panel. I really messed up. Just Planet Microcap Aussie Virtual Edition. We should make it. Matt, you have the other phrase, the finding the monsters before, or maybe you say finding the monsters as monslings or something. I don't know. That's really dumb. That is really dumb. But I'll be right.
Bobby's got it.
terrible. But so let's dig in. You know, we're the main point of today's panel is my audience is primarily a North American audience, global, you know, global here and there, but primarily North American. And, you know, this being an Australia focused event, you know, I really want to talk about what's so intriguing about the ASX, you know, debunking some myths, you know, just misconceptions, talking about experiences. So the panel joining us right now are three of the best to do it. And so I'm going to throw it first to Michael, because Michael is our North American representative on this panel today. So Mike, tell me real quick, you know, for you, what's so intriguing about the ASX and Australian listed companies?
I mean, from a North American perspective, you know, excluding present company, most people ignore anything that's not North American, right? Like maybe some people dabble in Canadian microcaps, but very few people are looking at Australian companies. Most people probably don't even know where to get filings for Australian companies. And that goes for, you know, most international markets, because it's just not necessary, because the US and the, you know, Canadian exchanges account for, you know, 10,000, 20,000 microcaps. You don't really need to go anywhere else. But because nobody's looking at these little niches, especially something like Australia, where there's a lot of promising companies, there's a lot of opportunity if you go there as a skilled researcher. And then more specifically with why Australia, I think, is probably one of the better, or probably the best international market. I mean, it speaks, first of all, the main language is English, so you can, you know, get a pretty firm hold on it. But also there's a lot more help, and a lot more industries that are more interesting, at least to me, like technology companies, healthcare companies, because, you know, it's not a large place geographically, so, you know, you have to do something more IP based in order to make money. And if you just look historically, healthcare and technology stocks have done really well, especially in the last year. So yeah, I mean, it's just a market nobody looks at, but it has a lot of promising companies. And if you look at the most successful companies that, for example, Connor has profiled in his presentation, a lot of them come from Australia, and a lot of them come from these industries that are specifically represented in Australia more.
Right. Yeah. Like I believe I have a note that it's 10 of the top 40 that he had in there were Australian listed. And, you know, just to really comment real quick on the fact that, you know, it is an English speaking country, despite the fact a few of my friends down there, I have needed a translator, but that, you know, look, that's really besides the point, you know. So Tony and Matt, I mean, what I'd love to hear your comment too, because I know Australia tends to be known as very similar with Canada, that it's mining heavy, right? A lot of mining stocks, and that you'll probably affirm that today because it's the case. But, you know, for you guys both don't tend to not focus in that area. So, you know, what's still so intriguing to you about the ASX, despite it being a smaller pick of the litter, if you're looking at non-mining investment opportunities? I'm gonna go to Matt first because he has it off mute right now. So I'll go to Matt first, and then we'll go to Tony.
Yeah. So I think for me, I'd agree. Kind of, it's. I think it's. I kind of think of it like the Wild West. I think Australia, like, it just feels like there's companies go public so much earlier, and there is like good rule of law and stuff, but there is also just a lot of promotions, I guess, like a lot of stock pumps and that kind of thing. And you just have just this sea of small companies. So you have a lot of, I think, basically the speculative like miners. There's a lot of speculative miners. You just throw those. I throw those out. It's like 40% of the index, but I think it kind of bleeds over to a lot of what other companies do, and I think it just means that people have been able to kind of gamble with the stock market, and there's enough winners there that they kind of translate that over to other industries. So I look at tech a lot, and you see it a lot with small tech companies where they kind of get these valuations, although they're you know, Zoom, they're not. So yeah, I think that's what's most interesting to me. I just think it's, as Michael was saying, like a place where you can invest the time to research and actually have an edge, because in that sub, say 100, 200 million market cap, there's not that much coverage. Often there won't even be broker coverage, a lot of these companies, Or alternatively, maybe there's too much and you have like every forum and Facebook group chatting about their companies and like bidding them up to crazy, levels. I guess they start getting pretty big pretty fast. I've seen things get to like $1 billion market cap, but are just nothing with no revenue. So that's not as common, I don't think, in the States. I guess I'm not, not investing there, but I guess it's more like, over-the-counter type behavior, but in a like more premium, like listed on the ASX, basically. So, yeah, that's what I like about it. It's just everything's a bit wilder. You can do more research, meeting with the management. You have to kiss a lot of frogs, I guess. You have to figure out, like, you have to turn over a lot of rocks to find the few gems. But I think the payoffs can be as that research from Connor pointed out, they've had quite a few gems come out of it.
Well, I gotta say, despite the ASX, as you said, is the wild, wild west. The compliance rules are really quite, I'd say, good. Especially when it comes to putting out news and information. Like, you have to put everything out through. You have to get ASX approval first, and then it goes. I mean, that's just unheard of in the States. You have to get approval by SEC or CDAR before you can put out anything. So I find that's pretty interesting and intriguing. But Tony, real quick, you can answer what I just said, and/or love to hear your thoughts on what's so intriguing about the ASX to you.
What you said about compliance has really improved in the last few years. Over the last, probably 2 or 3 years ago, there was a run of sort of companies that did some made announcements that were suspicious, or announced partnerships as major big bang things, and so the ASX has become very, very particular about that, almost to the point of being too difficult. Anyone making claims of sanitization claims against COVID, for example, has basically been put through the ringer over the last 6 months. And even if they've got legitimate evidence of the claims they're trying to make, the ASX really has made it hard for those types of companies. So they may have gone a little bit too far the other way, if anything, in some regards. But you can understand why, because there are so many. Well, the benefits of getting spurious announcements out there can be, in terms of market cap, as we've said, Australian story stocks can tend to run to pretty crazy prices. So for stock promoters, there's a real opportunity there to create wealth for yourself. But as far as what you were saying about the ASX, it is Australian. We've only got 25 or 6 million people down here, so it's a small market. So a great deal of businesses, particularly in the tech and biotech space, tend to sort of think globally from the outset. You don't need to, if you're in North America and you create a tech business that works, you don't need to think about what you might need to do internationally to make that business successful. It just the market's enormous, so if you're successful, you're going to be enormously successful. Whereas if you capture the Australian market, you look at, it's not an Australian business, but it's ASX listed, a business like Xero. Xero is an accounting software, effectively. They were built almost from the outset to be able to go global and to deal with all of the major, certainly the major English-speaking global markets. So that's one thing that I think Australian businesses tend to do quite well, is to think globally from the outset. And so that's one of the reasons why I think we probably produce. There's a number of things that Australia does at a sporting level and a gambling level, and there's a few things where we punch above our weight, and I think business-wise we probably do the same.
Well, you actually bring up a great point, because this is something we talked about on our prep call, and that's just getting to understand the Australian culture a bit well, especially in terms of the small, micro, nano cap ecosystem. As a lot of people, hopefully everybody watching on here may not know, but it's really one of the best ecosystems for small, micro, nano cap investing. I mean, it's very active markets, a lot of volatility, a lot of liquidity, so Tony, Matt, whoever wants to go first here, let's try and understand a little bit better about why it's such a fertile jurisdiction for small, micro, nano cap investing. What about being Australian and Australian culture lends itself to that? Let's go back to Tony. Tony, you go first.
Well, we talked about the gambling culture, and I'm not sure if you've heard this term, but Australia is referred to, certainly internally, as the lucky country. We obviously have a huge mineral resource down here, and we've always sort of seemed to sort of fumble from one lucky thing to another. We went until COVID came along. We went, what was it? It must have been 28 years, I think, without a recession down here. So we had a lot of a lot of things. Every time something looks like it's about to go wrong with the Australian economy, something comes along. So the Australian economy was struggling along a few years ago, and along came the Chinese mineral boom, and we've just been riding that wave for the last 10 or 15 years. So, but as far as that goes, that lucky country mantra is that I think Australians have a culture of sort of thinking, of expecting success, I guess. And so, we probably are less. We certainly take chances, I think, probably more on average than other people. So we talked in the session before this about the gambling culture and Australian gambling losses per capita. This is not a good thing, of course. It's a terrible thing, but world leading by so far. It's not funny, and I think there's a real punters culture here, a have-a-go culture, which is not the right way to invest. Certainly, almost everyone I know that starts off at investing in small caps is sort of looking to make quick money rather than sort of understanding the fundament of the business. So, but as a consequence of that, there's what Matt referred to earlier, this group of stock promoters and so on that sort of ride that. But one of the outcomes of that is that too many companies come to market, and probably a little bit too early. But if you're willing to spend the time and do the work, what I like to look for is that 2 or 3 years after, I look for broken IPOs is one of my favourite things to look for. Is that a company that's come to market might have IPO'd at 50 cents, and then that's one thing about our stock prices down here is that we use a lot higher stock numbers, so we tend to have what you would call penny stocks down there. But almost everything's a penny stock in Australia. They're almost all sub $1, certainly at the small cap end, a lot of them anyway. And so you have a stock that might have IPO'd at 50 cents, 3 years later it's trading at 5 cents, but underlying that, they might have missed prospectus forecasts, but they've actually built a real business underneath them, but everyone's lost faith in the business. And so that's the time when it really gives the fundamental investor the opportunity to come along and say, these guys, they might not have achieved what they were targeting at prospectus, but they've actually built a real business here, and now you can buy this thing quite cheaply.
Got it. And Matt, what would you like to add on to what Tony?
Yeah, I think Tony summed it up pretty well. I was stunned. So I'm from New Zealand originally. I was stunned by like the gambling, the difference in the culture, because it's obviously so similar in every way. But we have this thing called Keno, which is like it's like something that comes on TV, and it's like 20 numbers come up, and you bet on what numbers are there. And in New Zealand, that happens once a week on like a Wednesday night. And in Australia, I was at a pub and it was going on. It's like, oh, is it that time? And it's like, it happens every 3 minutes, like around the clock. So it's just like, yeah, a very different mentality. But I think it spills over very positively, as Tony's talking about, to like that have a go attitude. And I think maybe something even Kiwis can learn is just being kind of backing yourself and being a bit more aggressive about things. I think Kiwis tend to be a bit more conservative. And I think that risk-taking culture definitely flows through. It has negatives and positives, but definitely a lot of positives for like the entrepreneurial spirit. And Motley Fool, we kind of just said that Australia was the only place like more American than America in some ways in that regards. Like it just felt like kind of like I don't know, it embraces a lot of similar traits. But in terms of investing in the market, the other thing I love, I just kind of see it like listed venture capital, to be honest. Like it's like very close to how a VC world works with more disclosure. So and more liquidity. So I don't know, I love it. I wouldn't do or be anywhere else because you kind of got these really tiny, some of them are pre-revenue, which I don't really touch, but some, very early in their journey, you can invest in them. But then you have daily liquidity, right? Whereas a VC fund doesn't. You can never miss it, right? Like you can always buy into it. Whereas at VC, it's all about who you know and when you get in. And then you have reported financials like quarterly if they're burning cash or half yearly at least. And there is a fair bit of regulatory compliance that needs to go into that, and not all of them follow it, and sometimes they get found out and in trouble and whatever else. But that's all part of it. That's what interests me, is just being able to get in super early for companies that you just can't get elsewhere. I think it's it's one of the big advantages.
Awesome. And I'm sure everybody noticed that Connor just joined us during Matt's answer just now. So Connor, thank you for joining us. Really appreciate from Alta Fox Capital.
Thank you. Apologies for being late. Crazy earnings season, management calls. Sorry.
All good, man. Well, here, real quick, let's get your quick background for everybody who may not know the Connor Haley Alta Fox story, as well as your investing philosophy.
Sure. So I run Alta Fox Capital out of Fort Worth, Texas. We're a long short based fund. We try to identify high quality companies early in their growth cycle. We take a global view, so we'll invest anywhere, including Australia, where we have invested occasionally in the past. Our philosophy is really do a lot of deep fundamental work, understand normalized earnings and free cash flow 3 to 5 years out, and looking for the highest quality businesses early in the growth cycle that we can find.
Very good. So I'm going to come right back to you, Connor, because the main reason I invited Connor on our panel today is that his crew of interns, including himself, I'm sure he did a little bit of the work on here, they did a project over the summer called The Makings of a Multibagger, an analysis of the best performing stocks over the past 5 years. And sure enough, 10 of the top 40 best performing stocks over the past 5 years were listed on the ASX. So Connor, I'd love to get your comment on when you found out about those results and what that meant to you.
Yeah, it was interesting. So if you look at the investable universe that we screened for, with the exception of the total shareholder return category, right, it gives you a sense of like the baseline of companies. And so on that metric, Australia represented 5.1% of all the companies in the investable universe on the metrics we looked at. However, once you throw in the total shareholder return category, sort of Australia represented 11.5% of the results. So they were over twice as represented as they otherwise, you would have guessed from, a performance perspective, which certainly suggests that Australia, at least over the last 5 years, has been a very fertile hunting ground for multi-baggers in relation to sort of relative to other countries around the globe, which is pretty interesting, right? I mean, I think what occasionally we found about Australia, which I think makes it a really fascinating market, and we're by no means sort of experts specifically in Australia, but it's interesting because, when I look for microcaps, I often look for niche markets, right, where there's some local player that dominates, right? And if you look at Australia, I mean, it's kind of a niche market in and of itself. It's not a small, country, but at the same time, it is very geographically secluded, right? It has these ties to China, but there are elements of being a highly localized market, just given the different geographic profile of Australia versus an interconnected Western Europe, for example, or even the US, which is obviously much larger and has very different sort of competitive dynamics. And so it is sort of its own little special market, which often leads to interesting companies and sort of competitive positions.
Yeah, I wanted to get Michael's comment on this too, because as somebody who's been digging around and really looking at this niche for the last couple of years, I'd say, right, Mike? Were any of these findings surprising to you at all? Because I mean, look, you've been looking around there, and so it's still quite fascinating to see those results like on paper right there. Some of the findings that Connor had.
Well, yeah. So to be honest, when I started looking at more like geographical or international companies, like a year or two ago, and there's not a lot of choices because I speak some Chinese, but the Chinese markets are not investable. So it's mainly the UK and Australia that you can really look at. And at first I was looking at both, and then I did some you look at the best performers in each country, and you see how did these best performers get there, and then you try to find that earlier. And in the UK, while there were some, they were all kind of not stuff that you would invest in, at least in my opinion, like roll-ups, sort of weird industries, valuation, a lot of multiple expansions. So the best performers there just didn't, at least in a very broad sense, I didn't feel like that market was as great. But in Australia, there were a lot of very successful companies that I found, and I sort of looked at their trajectories, and I was like, yeah, this is something that seems really cool, and that would, at least I would hope I would have invested in the early stages. So yeah, it just in Australia, like I said before, like there's also this higher prevalence of healthcare companies and more like IP-based tech companies. And those are also industries that I really like. So yeah, it's a special market. I'm not sure why, like, you know, Tony and Matt, I guess, speculated as to you know, the cultural differences that could cause that. But yeah, for some reason, there's just a lot of great companies that seem to come out of Australia, and you know, don't really want to philosophize about it too much. So just kind of leave it at that.
Don't worry, we're about to philosophize a little more. Here we go with this question. So, well, because the thing is like we have to ask that question. It's like, all right, well, why? You know, why are there so many of these great companies that just go completely undiscovered? At least not by Australians or maybe other investors, but by a good amount of North American retail investors or institutions. You know, so there must, or maybe not, but I would assume there must be some misconceptions and myths about ASX or the ASX or ASX listed companies. So, I mean, Tony, Matt, maybe we can help us out and try and debunk some of these, or find out what they are, and then we'll debunk them.
I think one of the reasons would come back to we have a very good education system here. We don't have all of the, you know, America obviously has probably 6 or 7 of the top 10 universities in the world, but Australia represents, we've got 25 million people here in a world of 7.5 billion. Or thereabouts. So we're about 1/3 of 1% of the global population, effectively. We're very wealthy on a per capita basis. We're about the 13th largest economy in the world. But I suspect, I haven't looked at the top 100 league tables for universities, but I suspect we probably have 5 or 6 in the top 100, which, when you think about representing 1/3 of 1% of the global population, to have 5 or 6 universities. So we have quite a good education system here. Obviously a successful economy, good rule of law and all of those things, and an entrepreneurial spirit. So they're the drivers. That's the sort of I guess the magic mix that is the reason why we have a sort of an entrepreneurial bent in the country. And then as far as, you know, why you're successful, I think the fact that we've got a good education system, good support, and then that we also have, unlike I get the sense when I talk to the majority of Americans, it's a lot more insular. I think I read somewhere that only 20%, 80% of Americans don't have a passport, for example. Whereas I don't think that there would 80% of Australians would have a passport. So we think more internationally, partly because of our isolation and so on. So I think that they're probably some of the key reasons why we produce probably more good companies than we should, is because people think globally, and you know, there's a good education system and good pathways and an excellent set of capital markets relative to the size of the economy.
Listen, I would hope that 80% of Australians have a passport, because 80% of Australians love to surf, and the best surfing is in Indonesia. So, you know, that we gotta figure that out, of course. So Matt, love to get your opinion on this as well. You know, what have you seen as some misconceptions, and then debunk some myths for us?
Yeah, so I'd agree with everything Tony said. I think there's a strong focus on education, which means we get like some cool tech stuff get developed here, and CSIRO and others that then get spun out. Another kind of factor, maybe because I'm an immigrant, but I think there's even more of an immigrant culture than in the US. And, you know, Australia is very much a nation of immigrants. I think there's 30% of Australians were born overseas, which is kind of like double the US ratio. So I think that keeps the country kind of younger and generally kind of hungrier and everything else, and that global perspective. So I guess misconception about Australian companies is that they're Australian, because I think they're really global. Like almost all the companies I invest in are global businesses, kind of global niches, to Connor's point, is what I really like to find. Although if you can find a global that's not a niche, that's pretty good, but those are even rarer. But yeah, I think just a very large share of revenue for, you know, most of the companies I look at is overseas. And I think that's, you have to think global from day one, because as Tony was saying earlier, like the market isn't as big here, so it's just natural to think that way. And then I think just kind of because it more old school guys probably like they think of it as just a mining place, like you think about the Aussie dollar driven by mining, etc. So I think there's a sense that there's like speculative miners, and then there's a few big banks and that kind of thing, and it kind of misses all the good businesses in the middle that are just innovating and doing good stuff. So yeah, that's what interests me. I think that's what one of the similar drivers.
And Matt, I'm going to come right back at you, because there's one big thing that I know a lot of high quality investors in the US and North America, or just that aren't used to investing in ASX. So help us understand the typical capital structure, because I think most investors who may be watching this or maybe going to check out some of the presentations tomorrow, they'll be like, oh, billion shares, what the, and this is a quality business? Like what's going on? So give us some understanding as to how this is actually a more common thing.
Yeah, I don't. Tony touched on it before. I don't know completely why the drivers historically for it, but it is very common for companies to list around like 20 cents a share. That's just a common kind of denominator. And so as a result, you just have a much larger share count. So that's one thing. But then it's a lot easier to raise follow-on rounds of capital here. So there's a lot more opportunity for placements and other ways that companies raise additional funds, which isn't as easy in the US in the primary listed markets, my understanding. You kind of need to go out and issue a whole nother prospectus. It's a much bigger thing. But here it's just very common, like they're all the time capital raising, which I think you still need to watch out for it, but it isn't, you can't just look at share count number too much. You need to look at I guess how much they're diluting and over time. I do still look at share count, but it's more like the rate of change over time. So I used to do like a TV show where people would just call in, and the first thing I'd look at whenever they name some dodgy stock is how's the share count trended over time, and then has it ever made a profit? And that ruled out like 80% of them probably, but then there's like the few gems. So I think you still need to think about that. I think also dividends are bigger here because we don't double tax dividends, so it's more common for like companies to use a dividend to return capital instead of a buyback. So that makes it a bit different, and again means you're not eating yourself like the US companies with buybacks. So yeah, those things kind of combined. I think you just see it just looks different basically, but it's not actually necessarily that different.
Right. And one other thing that we talked about on our prep call, when it comes to some of the advantages that retail investors have when looking at companies that are listed on the ASX is, and it's very similar to US and Canadian microcap market, is that there's less analytical coverage, as well as the access to management. It's usually quite responsive. So, confirm this for me if this is actually true, Tony and Matt, and anybody want to confirm this for me. Actually, or Mike, anybody, go. Yeah.
Well, it'd probably better to go to Michael for this. Obviously, I run a fund now that's got a reasonable enough capital base, and that people can look me up and say, "Oh, he's serious," so they'll reply to me. But there was a time before I ran any decent amount of money where it was sort of the filter that I used to use, to be honest, because I don't spend a lot of time bothering my management. I like to make my own decisions, and I probably don't have quite as much management contact as a lot of investors that look at the areas that I do. But with that said, I like to know that if I've got a question that I think is important, that I'll get an answer back. So one of the first checks I do is to usually try and contact management before I start buying, or once I've decided that I like the company, I certainly want to understand management. Not having invested extensively in the US, I can't say if you're looking at a $100 million company, how often you would get a reply back if you send an email directly to the CEO. But in my experience, I would say it's at least 8 out of 10 here, within a matter of a few days. So I think that they're extremely responsive, and part of the reason will be what Matt said is that they tend to probably raise capital a little bit more often, and it's important to keep shareholders on side. So so in my experience, the responsiveness of management is very, very good in the small cap end here.
Yeah, I'd agree with that. I think it's also reasonably easy to jump on an analyst call. Like that's and I think as you get bigger in the ASX, it also happens, but also in the US, it's just like that's its own secret little clubby world. Whereas here, that's often they put out the call details publicly, and you can hear all sorts of questions get asked on an analyst call. And I'm surprised more people don't do it, because it's like a great opportunity where they can't really duck the question too much or avoid it. I think that's another opportunity if you're trying to meet with management, is just join the analyst call and ask something.
Very cool.
It is the downside of that, by the way, is you just get some terrible questions.
Yeah, that's what I was going to say. I don't want to be too rude, but yeah, you get some pretty low score.
What I'm surprised about, as far as management goes, is that more managements just don't say that's a stupid question, I'm not going to answer it, because that would be my answer to about 1 in 3 questions on those public calls.
Yeah, that's a fair question. Yeah.
One question I'd have for the Australian natives, I guess, would be, isn't there a pretty big sort of gambling culture within Australia? And if so, like, how do you think that impacts the market? Because one thing I've sort of witnessed from afar, and you guys are free to debunk this if you want, but it seems like, once a stock shows some, growth potential, it can really go sort of bananas in Australia. Like, people really jump on the hype train pretty quickly. You can get pretty big moves in a short amount of time, even more so, it seems, than in the US. And so I'm curious if one, you guys think that's somewhat hyper driven in Australia, and if so, if that's related to sort of a deep gambling culture.
Matt, Tony?
You said the native Australian, so it's Tony.
Well, we talked a little bit in the pre-call. It's Melbourne Cup Day today down here, which is called the Race That Stops a Nation. So it runs at 3 or 5 past 3 in the afternoon. Traditionally, everyone stops around midday, and you have workplaces have events, and it's a massive day. We talked about the fact that gambling losses per capita are about, I think Singapore is second in the world, and from memory, I think we're about 50% ahead of Singapore. And it's basically Singapore and Australia, and then daylight to third.
Did you pull it up last time, Tony? It was like $1,200.
It's $1,250 per adult, I think it was, something like that. So it's a big number in Melbourne Cup Day today, and this probably doesn't compare to the betting turnover of, say, what's your big race day, the Kentucky Derby or something like that. But the betting turnover down here will probably be $300 or $400 million today. The first prize in the Melbourne Cup is $8 million. It's a very big race, but we certainly do have a gambling culture, and to Connor's point, that does lead to successful story stocks getting very big valuations sometimes. There was a company called BrainChip Holdings that does some sort of artificial intelligence, and they made some, I'll just quickly pull up the chart here. They made some successful announcement and basically went from a $15 or $20 million company to about $1 billion valuation over the space of only a few weeks. It was just crazy. It's gone back down a long way.
Did they raise a lot of capital?
I don't think they took the opportunity, to be honest. Yeah, they went from about 3 cents a share in March to 68 cents a share in September. So, but the bulk of that rise happened from the end of May. It was 7 cents to 70 cents. So it went up tenfold in the space of only a couple of months on a couple of announcements that didn't sort of generate revenue. It sort of showed some potential. Now, I mean, you guys would get that a lot in North America as well, but some of what happens down here is crazy. I mean, it happens everywhere in capital markets, I suppose.
Yeah, I'd completely agree. I think the opportunities are to get in before that happens and maybe sell if it gets too crazy. You might sometimes you do need to sell. You can't just do the never sell stuff. But the other is just when it busts. So often you'll get something super hyped when it's pre-revenue, gets like burns everybody terribly. It's like 95% down. But then maybe it raised capital somewhere along the journey, to Connor's point, and then it still exists. And then a couple of years later, they figure out an actual business, and then everyone's like, well, I'm not touching that thing that set my money on fire. And you can get a new management team and stuff, turn that around. So I think kind of tech turnarounds can be interesting as well. But yeah, I think there's definitely like the speculative side spills over to everything else.
Yeah, for me, I was just curious, like, because we talked about compliance and how the ASX has gotten way better, and every publicly listed ASX company has to submit their news before it goes out. Who takes the liability really on that? Does the ASX always have to say something along the lines of, we do not take responsibility for this news being put out? Like, how do they, if they're going to be there to approve the news going out from some of these companies, like, what's their checks? Like, how do they make sure some of this stuff is actually happening? It might be a dumb question. I don't know. It could be a dumb question.
There's quite an aggressive litigation funding sector in Australia. There's a big business in the UK called Burford's, and there's one out here called IMF Bentham that fund litigation. And one of the big, so it tends to be the company and the directors and officers insurance policy that's on the hook, really. The ASX is a safeguard, and then we have Asic, which is our equivalent of your SEC, that also, but they're considered much like the SEC, I think, a relatively toothless tiger. They occasionally issue fines, and they sort of, they're a government body, so they chase their own tail without any great deal of success. They try to prosecute. They seem to pick the wrong cases to try and prosecute, and then the ones that should have been prosecuted go through and never end up. The people who should end up in jail never end up in jail. So, but there's that. I think it ultimately ends up being, well, theoretically it should be the directors. Directors very rarely go to jail, but occasionally directors and officers' insurance policies end up paying out big payments based on litigation, funded litigations that sort of go after that pool of money.
Gotcha. All right. Well, Matt, did you want to add something to that real quick before I get to my next question?
No, I'd agree. I think although they might review some, there's still a lot of stuff that gets through just because there's so many companies. I think at a certain point, companies get more like scrutiny and they get more closely reviewed. So there've even been public battles where a company like complains that they're not allowed to put out an announcement because the ASX won't let them. It's a pretty negative sign normally. And to those like lawsuits, there was a company, GetSwift, that got pretty crazy and actually raised 100 million at the top, to Connor's point, and now they're kind of like a cash box waiting for the lawsuit to settle to see how much of that cash they're actually going to keep. So I think it's still hard to police. I think that's why you need to do your own research.
Very good. All right, so now this is my favorite question to ask this entire panel today, and I hope everybody has a story prepared. So my question is to the whole panel, what ASX investing experience impacted you the most? And did that experience shape your current ASX investing strategy? Don't worry, Connor, I'll come to you last so you can think of a good story. But so Mike, I'm going to come to you first, and then we'll go. I'll shout out the next person.
Yeah, sure. So I actually do have a story, and it segues perfectly with what we were just talking about. I've only really majorly invested in 2 ASX stocks, and both of them at one point, for an inexplicable reason, rose by over 50% on just news of a partnership. And it wasn't like hype, but it wasn't nearly that important, in my opinion, to the business. So, because it was a partnership, there was no financial terms or anything. It was just like, we're working with this company. That's great, but not spectacular. And definitely didn't, affect the company to the extent that the share price rose. So that just kind of cemented in my mind, this idea that like Australian stocks do seem to move on. You could call it like hype. You could call it more like qualitative factors rather than, anything that actually impacts the financial state of the company. Like in the US, if you put out an announcement, the only way it's going to move the stock is if it will directly impact your financial statements materially in the next 12 months. Like if that doesn't happen, generally the stock probably won't move on the announcement. But that's definitely not the case on Australia. So it's just more qualitative, which, also sort of means that it's a little more, I feel like investors are a little more long-term in Australia, long-term oriented. So, a bad quarter is not going to tank the stock. Something that impacts financials in the short term isn't necessarily going to tank the stock if the qualitative story is still there. So in a way, it's beneficial. You don't get killed by just a superfluous bad quarter or something like that. And it's you can focus more on the qualitative long term, which is I think what a lot of us look into too. When you're talking about a great business, it's not like just numbers. It's a qualitatively good business. So if you have a qualitatively good business in Australia, at least in theory, with how much Australians focus on the story than the financials at any point in time, it's pretty good to do that kind of research, that kind of qualitative great company research. Very good.
So Tony?
Well, I've had a lot of lessons as far as businesses, the things that didn't work out all that well. But one of the best lessons I think I've had in terms of the effect of quality management on a business is a stock that I bought for my fund in 2012 and still own to this day. Just to be clear, I still own the stock. I think it's about our 4th or 5th largest holding. Is a company called Data, and I bought that business in 2012, late 2012. it was a pretty traditional value stock at that point. I bought it at, I think it was probably about 8 times earnings. It had some reasonable growth. It IPO'd about 18 months earlier. It actually doubled since IPO. It was the first time in my history ever as an investor that I'd bought the all-time highs. I started buying it. So we talk about number of shares on issue. It IPO'd at 20 cents, and the founder and his ex-wife still owned 95% of the stock at that stage, and about 4 of the 5% went to other employees of the business. So there was a tiny, really tiny free float of that business. It was sort of what we call a compliance listing effectively here. And so I started buying the stock at 40.5 cents, and I bought it over the course of about 4 months all the way up to 55 cents. And I was responsible for about half of the buying at that time. My fund was very small. It is not a great business. So it's a distribution business. They distribute IT, computers and hardware, and they've got a software distribution element now. It's subsequent to that, and this is the lesson. They just executed and executed and executed in a business that's low margin. So their average gross margin is less than 10%. Their NPAT margin, net profit after tax margin, at the time I invested might have been 3%, it might be up to 4.5% now. So it's a tough business. And we've got strong competitors. Its 2 major competitors here are Synex, who are US listed, and Ingram Micro, who's also another US listed. So they've got 2 major gorillas that they compete with. And just through being very, very good, it was just the key lesson to me in terms of that was just the quality of management is so important in small cap. It wasn't a small cap anymore. It's $1.5 billion or something dollar valuation now. But it's such a difficult business, and I've tried to replicate that success by buying other distribution businesses, because I've seen how successful they can be when you've got this distribution platform and you just pump and you add additional verticals to that distribution platform. You get enormous earnings growth from that. But I just haven't seen anyone else able to replicate it the same way. And Vlad Mikovetsky, this COO, and Mary Stostoyevsky, the CFO, have just done a spectacular job for the 8 years I've owned that business. And as a consequence, their multiples now 20 times versus the 8 times I bought it at. So I had that big advantage. But the great majority of all of the money we made out of that business was because they've grown their earnings so much through that period.
Very good. Thank you, Tony. And Matt, what experience has impacted you the most?
I'll cheat a little and give 2 because they kind of work together, I guess. The first was when I was about 18 or 19 and invested in speculative mining company and blew up what to me was a lot of money at the time, and really realized I didn't have a clue what I was doing and never touched anything speculative since then. That led me on the path, I guess, to kind of discover value investing and everything else, learning more about what I was doing. And so, yeah, I think that was like a big impact to avoid all of the downside. And then I guess a few years ago, investing in a few companies that went on to do pretty well, like went on to do kind of multi-bagger returns, but at a fundamental level as well. So one I've written about, A2 Milk, that I still hold today, but it was, I think, the best performing stock of the decade or something by one MSCI index, and it was just a branded milk company basically, but a marketing company effectively. And I think it did, when I was first buying shares, it was something like 500 million market cap, and now today they do something like 500 million of EBIT a year and have like 250 million of cash or something like that. And it just showed how, I guess, a business that isn't necessarily complex, like I invest in a lot of technology, but it's not about that. It's more about the business model itself, like super capital light, well managed. Just how much it can compound value, I guess. And there's a couple of other examples, some of which Connor caught in his multi-bagger analysis of Australia, that kind of reinforce that it's possible, I guess, that it's possible to have something that's not just running up of valuations that other people are willing to pay, more like a fundamental level. And that's where I focus on my energy now. So I don't get anything in the speculative side, just purely can the business deliver it itself. And I don't know, that gives me some rock to stand on, I guess, when I look at these businesses.
That was a good pun for, it was a mining experience, a good rock to stand on. All right. That was good.
Yeah.
That was,
Yeah.
I saw what you did there, man. That was good. So, all right. So Connor, close us out. What ASX investing experience impacted you the most, and what'd you learn from it?
I've had a few, both positive and negative. But I'll just bring one up from this year we were involved in, PointsBet, which is, it's an online gambling related name. And it really just reinforced all of the crazy gambler stereotypes I have about Australia. Kidding, kind of. So, I mean, this is a gambling related stock, right? It started the year close to $4 a share or so, went up to $6 in March, went significantly below $2. Now it's above 10. Obviously there's been a lot of volatility in the market since then, but like this was trading, it's gone from like trading at near cash levels in March to now trading at a pretty healthy valuation. And so and obviously it's a gambling related name, so it's even more ironic, I guess. But yeah, I've just found that some of these names react very differently to fundamental news than even the U.S. market, which some people would say has its own share of euphoria. But you have to understand that mindset in how you think a company will react to news, how you think about the multiples that will be placed on businesses in a variety of fundamental scenarios, and you have to be ready for the volatility because there tends to be a lot of it.
Yeah, you know what, dude? I'm going to throw it right back at you for our final question of the panel today. And you kind of already hit on it a little bit, so that's why I figured we'd compound there. Oh, shoot, I said the C word. Oh, my God. I take it back. But Connor, for those listening in that are looking for ASX exposure, what would you recommend to North American retail investors?
Well, I would really probably recommend they go read Makings of a Multi-Bagger, because it's a great analysis of some, I'm kidding, speak my own book here. But, look, I don't pretend to be like an Australian expert. We look for the highest quality businesses around the globe. We've spent, probably our fair share of time in Australia, but probably not an Australia specific expert like some of the other people on the panel. But I would just say for any market, whether it be Australia or anything else, to really try to sort of put yourself in the minds of someone there, really study a lot of the leading companies, understand the trends and the mentality. Every geography is different, has a different consumer, have different sort of trends. Like one thing I've learned over time is like the different connection that Australia has with China, and like how that relationship has evolved over time, given sort of the geographic proximity, in terms of, Chinese consumers really favoring a lot of Australian branded products. A2 Milk was just mentioned, which is a great example of that. But, there are always these sort of cultural differences, which as an outsider, if you don't take the time to really learn, you might come to the wrong conclusions and overlook some really powerful underlying trends. But, look, I think volatility is always an opportunity for the long-term focused investor. And so, if people are making these wild swings in valuation, that's, for a long-term disciplined investor, that should be an opportunity.
Very good. All right, Matt, what about you? For those listening in, looking for ASX exposure, what would you recommend to North American?
Yeah, I'd agree with everything Connor said. I think just being extremely picky, I guess, there can be wild swings. Don't just look at the most recent price movement and get too caught up with that. Like, just be very picky of the fundamentals of the business. I wrote an article sometime earlier this year, I guess, felt like a long time ago, just talking about how there's like 2,000 listed companies here, but most of them are not very good. But then there's a few that are. And I just think turning over a lot of rocks, really focusing on the fundamentals. I guess that applies anywhere. I just think it applies even more maybe in Australia, just given that there's a lot, as the guys talked about, that you can get a story stock just flying way too high. So yeah, I think just being super picky. And then as we touched on earlier in the convo, like trying to speak with management, because you can get that access even as a small investor. I feel like if you're calling from the US, I think we tend to like think that means something pretty big, like US investors calling must be like a pretty huge fund or something. So probably even better opportunity. And I think that getting to know management, are they trustworthy? Like, are they? I think if you just invest in ASX companies that aren't run by like dodgy people, then I think you're probably going to like beat the benchmarks pretty well. So that'd be my advice.
I like that. But all right, Tony, same question to you. For those listening in that are looking for ASX exposure, what would you recommend to North American retail investors?
Well, I think my call dropped out, so I didn't hear Matt's answer. So hopefully I don't say exactly the same thing. But I would spend my time researching very carefully and really understanding what you're doing. It's there are a number of companies that have executed on very, very big opportunities down here and outstanding returns, but because of that early stage venture sort of mindset, there's a lot of companies that probably come out a bit too early and maybe aren't quite mature enough in their business model. So really spend the time understanding what you're doing, and if you're going to look at the more, if you're going to play at the sort of more speculative microcap end, the ones that are a little bit, and maybe not pre-revenue, but very early in their revenue journey, is just to appropriately size your positions there in case something goes wrong. But one of the biggest changes in the way that I invest is, whereas probably 5 or 8 years ago I used to spend a lot of time looking at the 52-week lows. I spend more time these days looking at what's running at a 52-week high and why might that be. So sometimes it's worth waiting for proof of execution. This is one of the things that I've learned as an investor in the microcap space, is that rather than sort of going too early, you're better off to wait until demonstrated execution. Sometimes you can pay twice as much for a stock and have it be a better investment. And I think that's a useful thing to remember when you're investing in microcaps.
Very good, Tony. Now, Michael, close us out.
Yeah, I mean, I would definitely agree with everything that's been said. I think like with any investment, it's, you just got to jump in at some point. It's not too hard. There's not too many like barriers to entry or anything to researching and buying Australian microcaps. You can pull up the filings from the company's website or some like aggregation databases. And the accounting is a little bit different, but unless you get into the weeds, it's basically the exact same thing. And a lot of Australian companies put out presentations and stuff, so it's very professional. So you can get to know the story of companies pretty quickly. But I would say, if you don't want to go through all that hassle, the much simpler way is to just invest with Tony or Matt, which I know neither of them will say themselves. But that's probably the best way to get Australian exposure, I'd say.
That was good. That was unsolicited, everybody. So that's that's good stuff right there. All right. So with that, we got to close it out with. I need everybody to give where people can find more information about you and follow you on social media. But with that, we need some names of some of the ponies that are racing today, so that we can give our completely unresearched picks as to who's going to win the Melbourne Cup. So. Matt and Tony, you guys have to go first, because then you have to name a few of the horses, and then we'll choose which one we think will win. So
I'm going to pass it off to Tony. I have no idea. I gave up my speculative life a while ago, but I would normally have a flutter. I guess it's just been all the lockdowns and stuff. It doesn't feel like a normal Melbourne Cup day. Normally it'd be kind of gathering around and having a couple of beers. But yeah, I don't know. Tony, do you know any names for these guys?
Oh, you're on mute.
I just gave you the winner. He's on mute.
You did. I know. Damn it.
Sorry about that. I've only heard 2 names out of the field. I said to you guys, I've got a call at 12 o'clock, and then I'm probably going to the TAB, which is the Totalizer Agency Board. It's the gambling, and I'll go down and actually spend some time looking at the field. But there's a horse that ran second last year. Obviously, there's been a scratching, so there's only 23, so it's much easier to pick this year, only 23 runs. There's a horse that came second last year, which has a female jockey, which is highly unusual. She's coming out of Barrier 1, called Prince of Iran, which looked pretty good to me just hearing the story last night, but I wouldn't recommend betting based on that. I've got to go and do a little bit more work before I make my final decision.
Very good.
There's a very good. If you look online, if they're interested, the Macquarie quantitative. Macquarie is one of our big investment banks here. They have a quantitative team that does some sort of quantitative analysis, and they've got a very good record of picking. They usually give 5 names, and so they pick the trifecta a number of times. So they've got quite a good record. It might be worth spending time looking at what they've come up with. I'll just type it into the field here.
I know. I'm looking. I literally was looking right now. But here, real quick, while we go and search that, Connor, Michael, where can our audience go and find more information about you guys and follow you guys on social media and the like? So, Connor, you first.
Sure. So it's altafoxcapital.com, spelled just like it sounds. And then on Twitter, it's just at altafoxcapital. Keeping it simple for you.
Very good. Michael?
For me, on Twitter, I'm Michael2017L. And for the fund I'm working for, it's if.capital is the website.
Very good. Thanks, Michael. And Matt, while Tony is looking for the website, where can our audience go and find more information about you?
So mavenfunds.com.au, and then on Twitter it's at Matt Joass. And if any American microcap investors are looking at any ASX stocks and want to chat about it, I'm always game for a chat. Feel free to reach out. Very cool.
And Tony, who are their top 5 picks?
Only finding the 2019 picks. It looks like I haven't seen the announcement yet. Keep your eye on Twitter. The AFR usually publish it when it comes out of the Australian Financial Review. So,
put it all on Prince of Iran. That's what I heard, Tony.
Big time. So, as far as finding me, my Twitter handle's at EGP Tony, and that's because my company is EGP Capital, and so my website's egpcapital.com.au. And much like Matt, microcaps are a funny. I'm a small investor in small companies, and so I do like to sort of discuss ideas with other people. I find it useful. Everyone has a different view on these things, so I'm certainly open to receiving an email, my contact details. If receiving a direct message on Twitter, I'm always open to direct messages. I'm happy to hear someone's idea on why they like a stock.
Very good. All right, gentlemen. Well, thank you so much for joining me today. This was a lot of fun. And I look forward to speaking with you all individually or together again for next year very soon. So thank you all for doing this. And Melbourne Cup. Let's go. Let's go watch, So thank you guys.
Awesome.
Thanks, Bobby.
Thanks
Cheers.
a lot.
Bye, mate.
Cheers. This podcast is for informational purposes only and is not an offer or solicitation of an offer to buy or sell securities. SNN Network, SNN Inc., and the Planet MicroCap podcast and the representatives are not licensed brokers, broker-dealers, market makers, investment bankers, investment advisors, analysts, or underwriters. We do not recommend any companies discussed. We may buy and sell securities in any company mentioned and may profit in the event those securities rise in value. We recommend you consult with a professional investment advisor, broker, or legal counsel before purchasing or selling any securities referenced in this podcast.